broadcasting now.
Great, I think we're live now. Firstly, thanks to everyone for joining us on this webinar, Contingency Planning for Distress. I think we're ready to kick off because we seem to be at full capacity. My name is Tim O'Connell. I work within Aviation Advisory within Grant Thornton. I'll essentially be acting as host for this talk, where we'll hear on Paul McCann's thoughts on debt restructuring and examinership. Paul is a partner within Financial Service Advisory with a background in restructuring and receiverships. So Paul is also our global head of advisory. Paul's quite conscious of the fact that his wife has been cutting his hair for the last 8 weeks, so he's asked that you focus on his slides as opposed to any images. Delighted really to have Phil Seymour to join us from IBA. Phil is someone who most of the attendees here on this webinar are familiar with, and he's familiar with and you'll be very much familiar with the International Bureau of Aviation. So Phil, thanks for joining us. Really very much appreciate it. In relation to the situation that we're in and the purpose of this webinar, we don't, there is no need for an oversight to explain the situation that we're in. It's unprecedented. Half of all aircraft are in storage, and normal remediation actions are no longer available. And so, to that end, what we'd like to discuss is really kind of bringing from Grant Thornton's perspective, I suppose, expertise that is more relevant now than ever before to the industry. So Paul will talk on debt restructuring. He'll also talk on dealing with counterparties and examinerships. And then myself and Phil will talk on the independent business reviews. And it's brilliant to have Phil's thoughts on, really deep insight into the metal value and the true cost of repossessions and maintenance events and so on like that. So without further ado, I'll hand you over to Paul. So.
Great. Thanks, Tim. And hello, everybody. You're very welcome. I think Tim said that my wife was cutting my hair. I think that's a very loose description of what she was doing, but very, very glad to be here and to talk to you today. Just to talk on debt restructuring for the moment, and why I think maybe just to touch on why it's important in the aviation sector at this moment in time. And what is, why is restructuring important? The fundamental principle of restructuring is that a business that's in financial difficulty, it is better to have a consensual workout or consensual restructuring than to have individual creditors trying to enforce their security and move to enforcement. So the fundamental principle of it is that if a company has time to restructure, it can give a better outcome for all the stakeholders, and in particular, the creditors. And I think what's really interesting from the aviation perspective at the moment is you have this really, really significant event. And if you think about it, it makes very little sense for aircraft leasing companies in particular to enforce, right? So there's a financial distress situation with an airline, but yet there's very little benefit to enforcement at this moment in time. And there's two reasons for that. A, the cost of repossession, and I'm sure the guys will touch on that later, but also there's, what kind of a market is there for repossessed aircraft at this moment in time? So therefore, the situation that we find ourselves in aviation lends itself to consensual multi-creditor workouts rather than enforcement. And so therefore, the fundamental principle is that consensual restructuring is better than enforcement. Sometimes that's not always the case, but you can definitely see from an aviation perspective that it very, very often is the case. There's 8 principles of restructuring. And we're going to go through each one, and we're going to try and just talk about it in a very simple and easy way and use some practical examples, Irish examples and international examples, both from the last global financial crisis and from the current situation we find ourselves in. Some people would call the 8 principles the London principles, and that's when London often is a centre of restructuring. But of course, as we know, in particular with aviation, Ireland will be a centre of restructuring, because a lot of discussions will be taking place between aircraft leasing companies based in Ireland and airlines which are based around the world. So the other thing I think, which again is a feature of the industry, is an awful lot of aircraft leasing companies, to diversify their risk, have leased aircraft to many different airlines. So it would be very unusual for any Irish-based aircraft leasing companies to have no airline situation over the coming 12 months. So virtually all of you who are listening in today that are involved in aircraft leasing, it'd be very unusual, I suppose, for your organization not to have debt restructuring and multi-creditor workouts on the table as an agenda item for you. And obviously also, if you're with airlines, the significant part of your balance sheet, the creditor side of your balance sheet, will be to aircraft leasing companies, and very often you know, you're going to have to negotiate, if you're on the airline side, with the aircraft leasing companies. Grant Thornton ourselves, we have started work with 2 airlines and helping them negotiate their situation. Okay, so moving on to the first principle. The first principle is that a standstill needs to be entered into. And what is a standstill? A standstill is effectively an agreement which is entered into by the creditors of the airline to say that, you know, for a period of time, we will effectively, as it says, stand still and not take any action till we see if there's a better way of moving forward with the current situation. I am the administrator of Quinn Insurance, and those of you who remember from the last crisis, with Quinn there was 900 million of assets that was in the insurance company, which were pledged or guaranteed to bondholders of the Quinn Group. So in that scenario, you know, there's an awful lot of creditors who are very anxious at a particular moment in time, and to allow, if you like, time for people to consider things carefully, you enter a standstill. There's no defined period for a standstill, but it is often 90 days, and 90 days is considered enough time to negotiate, but equally not too long a time so that creditors have access to justice should they wish to take a different route. The second principle is the equity principle, and the equity principle is that the creditors undertake not to take any enforcement action during the standstill period. And in order for them to commit to that, the creditor position relative to other creditors cannot worsen during that period. And because obviously, you know, if there's no cooperation or principles of restructuring, you know, creditors will try and, you know, get one over on each other to try and better their position. And I know from our work that we're doing in the aviation space at the moment, that's a significant issue for aircraft leasing companies now that are negotiating with airlines, is this principle that am I being treated equitably? That there's no other leasing companies or other creditors that are getting preferential treatment or a different treatment to me. So it's really important for creditors to feel that they're not being prejudiced, or that that other creditors are not being preferred. That what often happens in this scenario is sometimes creditors who have either connections or connected parties or relationships can somehow obtain cash flow during the period of difficulty, and obviously that is not good for building trust with the creditor body at large, that no creditor is doing better during this period. So the equity principle is that the creditor position relative to other creditors does not worsen. Equally then, the debtor entity, so say in this scenario would be the airline, the debtor does not take any action that would worsen the creditor position. So So it doesn't take any action which could be perceived as assets dissipating. So, for example, a restructuring that I was involved in was the Moran Group restructuring in Ireland. It was a three-quarters of a billion loan syndicate of banks. And during the standstill period, there was an option to sell one of the hotels. And obviously then, you know, that in a situation like that, the debtor does not do that without full cooperation, full consultation with the creditor group or the bank syndicate group. So the principle here is that, you know, the assets do not dissipate during the standstill period, and the debtor doesn't do anything that will impact on the creditor position. The next principle is the herding cats principle, and I suppose by definition, herding cats is sometimes what restructuring professionals talk about, of trying to get a group of creditors to generally go the same direction. And if you've ever tried to herd cats, it's extremely difficult because they all want to walk different directions at different paces. And so the idea here is it's very hard to get a consensual restructuring done if you're trying to deal with many, many creditors individually. So the principle 4 is that the interests of creditors are best served by coordinating a response. Some examples of that in an Irish context, during the Quinn Group restructuring and Quinn Insurance restructuring, Bingham McCutcheon, which was a law firm, they acted on behalf of the group of bondholders. And even in the aviation sector, you've seen with Virgin Australia, there was an Australian law firm, K&L, ended up acting and coordinating the interests of various groups of creditors. So in this way, you have a much better chance of getting something significant done, and that's because you have one representative, you know, and one voice. The next principle is information, and obviously, if you think about the numbers involved in the aviation space and the aircraft leasing space, the numbers are significant. We're talking about big sums of money, and if you're asking creditors to potentially take a haircut, to take lease deferrals, you're going to need really, really good information. And the debtor needs to be committed to giving really, really good information to all stakeholders, but particularly the creditors, so that they can make a decision. Very often, as we all know, restructuring is a transaction at the end of the day, so therefore tax can be really important also in the context of the big numbers that are involved. And also then you would also then sometimes use independent firms such as Grant Thornton to do some work independently on behalf of a group of creditors or on behalf of the debtor to assist the process. In this scenario, you would often bring in specialists, and that's why we've brought in our friends from the IBA, because obviously things like valuations are very important to enable everyone involved to make a decision. In the Moran's restructuring that we were involved in, CBRE played a huge role in understanding the valuations of the underlying group of hotels. So information and accurate information, reliable information, independent information, specialist information is really important when we're talking about these sums of money. Proposals for resolving the difficulty should reflect applicable law and also the relevant creditor position that was at the start of the commencement date. And I think this is just a general principle that, you know, your proposals can't be bonkers. They have to reflect, you know, the applicable law of the land. In this space, the Cape Town Convention would play a part, and it has to be applicable in terms of whether it's the waterfall of creditors. You know, you can't jump from one class of creditor to another without looking at the applicable law. Confidentiality is hugely important. If you think about the situation that you have here, you know, both the creditors and the debtors are involved in a significant transaction which involves customers, employees, creditors, shareholders, governments, and and the media, and it's really, really important that that lots of information is given to creditors, but they must keep that confidential. I think an industry issue for restructuring professionals is, can creditors use that information to start planning other types of enforcement? What often comes up in an Irish context is whether creditors can use information for, say, a creditor-led examinership, where you know, a lot of information is needed to make a court application. But the principle is, during the standstill, creditors must keep that information confidential. And then the final principle is that obviously sometimes businesses that are trading would require working capital during the standstill period. Ironically, this isn't a huge issue at the moment, because some airlines aren't flying at all, but some are flying and they do need working capital. And the principle is that creditors must accept that any additional funding that comes in during this financial distress period should rank super senior to other forms of creditors. And we've seen this in the UK at the moment with the government scheme to support businesses. And the government are coming in for a sort of a non-investment grade but large company. And if they come in, they're going to rank super senior to everyone else. And I think that's a good way of keeping everyone honest in terms of, you know, the existing group of banks must accept that they will rank behind this new money. So they're the 8 principles. I think it's good to have a working knowledge. Everyone involved in aviation at the moment, it's good to have a working knowledge of what does a good consensual restructuring look like. And if you work within those principles, hopefully everyone will get to a good result for everyone. To focus a little bit for the moment on Ireland, and our statutory restructuring tool is an examinership, which was brought in 1990 to save the Goodman Group. And I think the key thing to understand about examinerships, it's to facilitate, you know, either the whole of the business or part of the business by entering into a scheme of arrangement. The key difference between examinerships and the UK administration is that the UK administration can be used just as a vehicle to obtain a higher price, whereas examinerships that is not the purpose of an examinership. It's to save the business, and primarily when it was introduced, it was to save jobs, because if Goodman fell, the job losses from an Irish context would have been significant. So that's the key difference between an examinership and a UK administration. And during the examinership, you know, the key things that tend to happen is an injection of capital or investment, working capital or investment, which facilitates the scheme, the removal of onerous contracts such as leases, and changes in work practices. And I think the key thing in terms of onerous leases, and you can see this as well with some of the international restructurings, is, you know, the examiner has to look at a lease, for example, and obviously we have this situation with CityJet at the moment, which some of you may be involved from a creditor perspective, and the examiner needs to look at that lease and say, can this lease be renegotiated? And if it can, that's fine, and if it can't, it has the ability to repudiate that contract or repudiate that lease. So again, in a short space of time, the debtor company and the creditor need to quickly form a view whether a new lease can be entered into or whether it's to be repudiated as part of the scheme. So if you think about it in the context of airlines, 100 days is not a long time for that to happen. Just some other things to say about the process. Once you make the application in court, you have immediate protection from the filing of the papers. It's often done, or very often done by, or most of the time it's done by the directors of the company. Very rarely it can be done by a creditor. So there hasn't been that many creditor applications for examinership. There was one last week where Joe.ie was a creditor application. I did the independent expert report that accompanied the petition for that application, and an interim appointment is made. The examiner doesn't have statutory powers or executive powers, right? So his role is to, or his or her role is to come up with a scheme in the interests of the company. You can, in theory, make an application to the court for executive powers, but that would be considered difficult, I would argue, in the aviation or airline business, because let's face it, your average insolvency practitioner, doesn't know a lot about running an airline. So it's the management's job to run the airline, and it's the examiner's job to put together the restructuring for the company. The key principle in an examinership is that the creditors should do better in an examinership than they would on liquidation, and that formulates the base principle of how an examiner should formulate the scheme. It's a 100-day process, and this slide, I'm not going to go into huge detail on this slide, but I think if you're involved in CityJet, or if you're involved in any other examinership which takes place over the next 12 months, 12 to 18 months, and we are expecting many examinerships over the next 12 to 18 months rather than bank-led restructurings from an Irish context, it's important to know the various stages of an examinership. And this slide is a good little placemat to have, which takes you to from day one, when protection starts, the independent experts report in the application, right through to the main petition, where creditors can appear and formulate their give the court their thoughts, through to day 35, where the examiner has to formulate the plan and convenes meetings of the various creditors and shareholders. And then the meetings of creditors take place, where the examiner sets out why the creditors should vote in favour of the proposals. And then finally, once he gets one class of creditor to vote in favour of the proposals, he can apply to the court to have the scheme confirmed. Creditors are not entitled to appear at the final confirmation hearing unless they voted against the proposals or did not vote. So as you can see from that, things happen quickly. It's important for you, if you're involved, that you know the various stages, and that you exercise your rights during the period. So again, if you're a creditor in an examiner situation, which some of you may be, the first thing is to look at retention of title, or are you obliged to refuse supply during the period. You have to engage with the examiner to agree a position during this time. You will be put into a creditor class, and again, it's important for you to work out what you would get in a liquidation scenario versus what you are being offered in the scheme, and then you have the right to vote on that scheme. And as I was saying, only creditors that didn't object or didn't vote can appear at the confirmation hearing. And then finally, the scheme is confirmed. So there's lots of similarities there with the UK administration, but there are some differences. So with that, I'll hand you back to Tim.
Okay, so thanks very much, Paul, for that insight into the debt restructuring and examinerships. That's very interesting. On to the second part of the webinar now, where we look at independent business reviews. And a big element of that is cash flow forecasting. So we'll have a look at that, and then maybe go into a little bit more granular detail with Phil's slides. So just in terms of, I think the most current thing at the moment is the negotiations that are ongoing between airlines and the leasing companies. And what I thought would be useful for this webinar is for us to share insight into the approach that we've been exposed to. And really, at the end of the day, elements to the cash flows are similar across all negotiations and all proposals being put across the table, and they are fixed rent, your variable rent, the deferral principal and interest. MR obviously comes into it, is the engine and total care package, and the event costs. So ultimately, these roll up into an IRR, and what's useful from the airline's point of view is, can they step into the shoes of the leasing company and see what return the leasing company gets under various different criteria. So if the lease was to run out as it was meant to and COVID didn't exist, what would be the IRR for the leasing company? If, on the other hand, the aircraft needed to be repossessed, what would be the return for the leasing company? And then any proposals that the airline are putting across the table should be somewhere between those two IRRs. So where would a rental haircut of 30% sit within that? Where would a rental haircut of 20%? So what we've seen is that is a very useful approach that the airline takes in order to gain a bit of perspective from the counterparty in the negotiations. So within the cash flows that you see there in front of you, the maintenance reserves is probably the most opaque and the one that the airline will need to do as a bit of digging in order to uncover. So what you see here is, this is a real redacted example with the figures slightly adjusted for the events that the airline anticipates to fall due during the remainder of the lease. So in this particular instance, the event, the maintenance is covered by MR payments, but the airline will look to consider moving off MR and switching to an LC. And if he does that, obviously that reduces the cash burden from day one. But in order for him to consider the benefits of that, he needs to know when the events will actually fall due and what's the cost of those. You'll see there the engine performance restoration aren't included because in this instance there was a total care package, and also there's no LLP event. And this example is a wide body, so it would be quite common that there is no LLP event triggered. Nonetheless, the airline needs to anticipate what the EOL compensation is going to be. So in this instance, it's a fairly reasonable calculation. You see the red line here represents the maintenance status. It is starting at 100, and at the end of the lease, when it's anticipated the aircraft will be handed back, you're looking at 30%, and you've got the associated costs then over on the primary y-axis, and that is over 12 million per engine stack. So so the last element then, we mentioned the OPRA agreements, and again, it's useful for the airline to consider what would happen if they were to come out of those agreements, when the events are likely to fall due, and what's the associated cost. In a lot of instances, it's not going to be viable to do that because, you know, certain engine manufacturers have the maintenance market sewn up, and also you're taking on a lot of risk if you do this. So at this point, we're getting into quite a bit of detail, and it's probably appropriate that I hand over to Phil. Obviously, Phil is you know, one of the main authorities on metal value when events fall due and the market. So Phil, it's a pleasure now to hand across to you, and very much looking forward to hear what you have to say.
Okay, yeah, thanks, Tim. I mean, you do touch on a very important matter there, because, you know, the whole aviation world is suffering. It's obviously the airlines, but the MRO sector and the airframe and engine OEMs. So when we look at the news over, you know, recent weeks with the likes of Rolls-Royce laying off, you know, thousands of people, that's not just because they see a drop-off in new engine sales. They actually see a drop-off in the engine refurbishment. You know, if aircraft aren't being utilized as much, then the shop visit programs reduce. So just touching your point in terms of how much negotiation room there would be on that, I think there's going to be some tough conversations. I think as far as the the IBA input here, and thanks to Grant Thornton, Tim and Paul for inviting me along to give you some input here. We're really going to be talking about some of these maintenance cost areas which may not have been fully modelled, not because they are impossible to model, but they are kind of only come along once every 10 years perhaps, and it's not unusual to find a situation where an aircraft has to get repossessed or returned early, but clearly we're in a bit of a tsunami of these situations right now. So the headings here, I won't go into all of these in great detail, but they're worth a mention. Obviously, if an aircraft does stop flying, it needs to be made secured. It needs to be put into a storage location which is safe and secure. You need to understand whether your aircraft has got titled engines on board or on the aircraft. Maybe engines are already in the shop somewhere or on somebody else's aircraft. So there's a lot of practical considerations here. The redelivery process, of course, and getting hold of records and understanding exactly where those records are and their accuracy is pretty important. Taking an aircraft back on board can be a big liability for a lessor or a bank. Normally the insurance and so-called CAMO, continuous airworthiness management, is all part of what the airline does as part of the management process. So a decision to take an aircraft back is really going to throw up some considerable costs for the lessor. There's obviously a lot of regulatory liaison required. The aircraft may be registered in one country or one jurisdiction, and there may be a need to export that into a more friendly jurisdiction. I know there's a very strong use of the Irish register amongst many of the Irish lessors, which is obviously very useful for them being in the right domain, but it's not always as simple as that. So in terms of the work required from a lessor to actually get an aircraft back, there will be considerable expense. And we're talking many hundreds of thousands of dollars. And if the aircraft is a wide body that needs to be reconfigured, the lessor is going to be looking at maybe having to invest many millions of dollars. So in these situations that Tim described, where is there a balance or a midway, then I think it's important that all of those are thoroughly explored. Obviously, if an aircraft is taken back, when it does go back into service again, then there will be performance of the overdue maintenance tasks. There could have been airworthiness directives that fell due whilst the aircraft was in storage. So again, this all adds up to the cost. So this is really saying, whenever we're involved, and we do get involved in repossessing a lot of aircraft, it's always really the last resort. So next slide, please, Tim. Thank you. This is just a bit of a macro reminder of our industry. And I think it's worth remembering that for many, many years, investing in airlines was always going to be a tough call. And this is an IATA graph that really shows the difference in that investment return between investing in airlines and other similar assets elsewhere. And it's really only been since 2015 where airlines were seen as perhaps being investment grade. That obviously dropped off in recent years anyway. 2018 and 2019 were not great years in terms of global profitability. And of course, some airlines will say, hey, we've never been investment grade. I think a lot of the boom in airline results, a lot of that came out of the USA, where revenues are in US dollars and costs are in US dollars. I think as we've seen over recent years, generally a lot of currencies have suffered against the US dollar. And considering that most leasing and finance charges are in US dollars and fuel cost is generally in US dollars, you can see how some airlines in some parts of the world with weaker currencies have really suffered. So this is just setting the scene in terms of, for those of us who've been in the industry for several decades, of course, this is an unprecedented downturn, but we have seen many downturns and many pressures on airlines in the past. So next slide, please, Tim. Thank you. So again here, this is really setting the scene for our prediction in terms of how many aircraft may be affected by the COVID-19 downturn. And I suppose really what we've done is said, well, what are the easy decisions that an airline can make and what are the hardest decisions that the airline can make? And clearly this list, I'll name a few of those. Older aircraft which were probably going to be coming off lease in the short term anyway, or aircraft that were in need of some heavy maintenance. Perhaps they were, looking towards a very expensive, maybe 18-year check or 22-year check. Those were probably likely to be perhaps retired or utilization reduced in any case. Aircraft expensive to operate. And I think here, as you've seen in the news over the last few months, an aircraft such as the A380, whilst it has amazing seat capacity and return on investment, if you fill every seat, the cost of getting that huge aircraft up in the air, 4 engines. I think some airlines operate with almost 30 cabin crew members. These are huge costs. So it is an expensive aircraft to operate. So we've seen lots of decisions on retirements of those A380s. And there's been a lot of talk about some of the other older twin engine wide bodies being under pressure as well. So I think there's, in terms of the way we build up our prospect for some of these aircraft, as you'll see in the upcoming slides, it's quite tough. Now, there will be some aircraft where airlines are kind of, I would say, stuck with them. If they've signed into very long-term leases, maybe they're only a couple of years into a 12-year lease. They're the youngest, most efficient types of aircraft. Other aircraft may be slightly older, but there may have been big investment to complete interior fitments on some of those aircraft. It may be that you're in a good position with a lessor and you've got quite big exposure to that lessor and they are willing to take back some aircraft or swap a larger aircraft out and put a smaller one in. So these conversations are going on as we speak, really. And of course, if you've committed to taking deliveries this year and you put a lot of pre-delivery payments into an aircraft, you won't really necessarily want to lose those. And a newsworthy item there, of course, is you may have seen in the news, EasyJet have had a bit of a session at board level with Stelios Hadjianu, who remains a major shareholder, really saying he thinks that the EasyJet order with Airbus should be deferred or cancelled, but the EasyJet board saying these are essential as part of not necessarily a growth plan, but as part of a replacement plan. So every airline will have different scenarios. Next slide, please, Tim. Right, this here, again, I'll give you a very high level view of this. This is our initial narrow body fleet scenario. And really, if we look at the blue bars or the block on the left-hand side of the left axis, these are what we would call the new aircraft. And the blue bar on the left of that is the backlog. So we're looking at 11,000 aircraft on the order books of Boeing, Airbus, etc. This is why, generally speaking, they're talking about, if you want an aeroplane, you're going to wait 5 or 6 years. At least that was the pre-COVID discussion. Now, what we've looked at is the shorter term, 2020 and 2021. So the next bar is the plan of the new deliveries that were expected out of Boeing and Airbus pre-COVID. And then we've really taken a view of that with who will really take some of those aircraft, and considering we've still got the MAX issue, we've assumed the MAX would re-enter service in September this year, but that is purely our opinion. We don't have any inside knowledge. So if you look at that, that's quite a hit on the numbers of aircraft that the OEMs were due to deliver and where we think it's going to come out at over the next 18 months. If we move on to the in-service fleet, the actual we would regard the green, the areas that we've covered with the green dotted line are what we think are probably the safest view as aircraft that will remain in service. But we've really taken a view that some of the older aircraft, as I've mentioned in the previous slide, there will be a number of aircraft, number of decisions that will be made which will put some aircraft at risk. And then in terms of looking at the stored aircraft fleet, there was already a stored aircraft fleet. Some of this blue is the MAX fleet that's been stored. We would expect those to come back into service. So the combination of the younger aircraft, new aircraft deliveries, we would expect to see in the order of, well, rather, I should say, if we take into account the number of new aircraft deliveries, the aircraft that get put back into service after COVID, minus the older fleet and the aircraft we see at risk, the net effect is about 1,100, well, we've actually put here 1,140 narrow bodies being removed from the market. So that is a net number. There will be the new deliveries, but we're seeing probably over 3,300 narrow bodies that would be taken out of current service. There'll be some new aircraft introduced and some stored aircraft coming back. So this is still a relatively big number in terms of aircraft that are likely to be taken out of service that may then need a discussion between lessor or financier as the fleets are restructured. So we'll move on to the next slide, which is very similar, but is the wide body fleet scenario. So the same again, the three bars on the left-hand side are the new aircraft orders and what we believe was the original plan for 2021. And very similar, we see that being cut down almost by half in terms of what will really be delivered out of the factories. And then taking the same view of either aircraft that are difficult to put back into service or keep going. So we've got the red bar. The red bar here is the current quad generation. So we're talking A340s and 747s. A340s, A380s, 747s, for example. We actually really see a problem for a lot of those coming back into service. So hence the green ring-fenced fleet is what we see as coming, of the in-service fleet coming back. There's still a significant number of older wide bodies that we think will be under threat. So overall here, the net effect is that we see 1,300 wide bodies being taken out of the wide body sector. And as a percentage, that's much bigger. That's almost 30% of the current wide body fleet we expect to be reduced by that number. So I think you'll see that that's some of those numbers are relatively big. There's a lot of value here. Some of these aircraft will have some big impacts in terms of impairments, quite possibly. So the next slide, please, Tim. And this really leads us into valuations because there's been a lot said, and we put out our initial indications of what we think might be happening to market values and lease rates, etc. But I do think it's very important here, and we've been in discussion with several parties, including some of the audit side of some of the firms, is that really in terms of what an aircraft is worth, or what anything is worth today. If you put anything up for sale, you're probably going to be struggling. So we have to take a view here as to what is the objective of the valuation. Over here in the UK, you've probably seen Flybe went into administration just prior to the sort of global grounding situation. It was already in trouble, but you can imagine the calls us and says, I'm probably going to need to sell an Embraer 190 or a Dash 8 Q400. I need to sell it in 3 months, and it's as is where is, what value will I get? Well, clearly, if we look at the considerations down the left-hand side of the first block, you know, a distressed sale value is clearly the expectation. We do have a soft value definition at IBA. It's not an ISTAT definition, but we do use soft value in our IBA IQ platform. But even that may not be enough. But I think here it's really important to understand the context, because I think for a lot of lessors, investors in leasing companies, we think have probably taken a long-term view of the assets. Also for airlines will be deciding which aircraft are more or less important to them per our previous slide information. And there will be some aircraft that airlines will see as absolutely crucial to their operations. And that's a long-term view. So I think a lot of the discussions we're having right now are whether base value is a suitable proxy for value as opposed to market value. And I think in terms of the accounting side of the situation, IAS 36, which looks at impairment of assets, market value is, ISTAT market value is really closely aligned to fair value less cost of sale, which is an IAS definition. The other way to value something is through the value in use. And we have been having discussions as to whether base value is a reasonable proxy for value in use. That's probably a whole new webinar with Grant Thornton, but I just want to make the point that, you know, there's a lot of considerations when it comes down to what is the value of the asset. So I think in terms of, you know, understanding, you know, the participants in any transaction, we've referred in this slide specifically to operating lessors because you may be in that sector. But I think here the view is that we think base value and leasing company is probably more relevant than an absolute market value. So Tim, next slide, please. And this was just a lot of questions we're being asked is about, you know, what happened post 9/11. Are there any, you know, reasonable, is there any reasonable correlation? I mean, I think we're all probably aware that this downturn, because it's been of a global nature, is unlike anything we've seen before. But I think in terms of 9/11, it's a useful proxy because it did impact passenger confidence for many months. It was closely followed by SARS. So if we look here, this is really the relation between market value and base value. And I would say in an ideal situation, the figure here on the y-axis of 1, there would be a correlation between market value and base value. Clearly what we saw in this example, this was a 1998 737-800 or a 1998 A320ceo. And obviously when 2001 came along, it was only 3 years old, so these were still pretty valuable assets. But we did see a fairly sharp drop in terms of market value compared to base value. So that drop actually took several years to get back to a ratio of 1. But then actually there was a bit of an overswing as we headed into, I was going to describe them as the golden years, but the pre-global financial crisis where governments were borrowing, businesses were borrowing through 2006, 2008, then it actually worked the other way where we saw the market value shifting above base value. So I just really wanted to sort of finish off with this slide to show you that in the long term, this is why we think base value is a reasonable proxy so long as there is a long-term future in the business. So I think on that note, I'll hand back to Tim. I don't know if there's any questions, Tim, or whether we finish at that point.
Phil, that's absolutely brilliant. Really great insight there. And for those who tuned into the original webinar, you'll be aware that due to a storm, there was a power outage, and Phil was cut off. So I had to pick up Phil's slides. So the insight there is vastly different and infinitely superior than my attempt. So, Phil, thanks a million for taking the time to go back and re-record this. I think it's been a really good webinar. We've tried to, see, okay, the industry is going through an unprecedented situation. Like, where can we address the really pertinent topics? And so we had a really good talk from Paul in relation to debt restructuring and examinerships. Then from my own perspective, certainly the change has been moving from a kind of transaction situation to actually more, a normal trade sale transactions and supporting the pricing of those, to negotiations, which is a first for me, if I'm being honest. So it was good to be able to give a bit of insight there as to how those negotiations are going. And the key thing there is just, irrespective of which party, the airline or the lessor, certainly viewing things from the lessor's perspective is very informative. And then to follow that up with Phil's insight has been really great. So huge thanks to Phil and for IBA working in the background on this webinar. It's been oversubscribed. There's been great interest in it. So thank you to everyone who has tuned in. Very much appreciate it. And who knows, we might, as Phil mentioned there in his talk, there might even have to be a follow-on on particular subjects. So thank you to everyone, and very much appreciate it.